Liquidity zones is the most powerful way to trade, but it's very important for you to understand the three main concepts on how the market will behave, behavior in context with level 2 information. Level 2, when I say level 2, we are going to look at the pending orders sitting in exchange in high liquidity. That's and then we're going to make the decisions on those things. First concept out of the three you need to understand is, what is liquidity run? Liquidity run is nothing but once you are able to identify the strongest liquidity zone. In this case, I have marked seller's zone. That means a sell orders sitting at a particular price point. The market price action goes almost near to the price line. There may be any action bounce or something. Eventually, we wanted to wait till the price completely takes over all the liquidity. Once the price crosses the liquidity will disappear, and then wait for a pullback and then continue in the direction. Then this is a great way to enter the long trade. The key is the price should take over, eat all the liquidity. That means price should cross this liquidity zone, eat every single liquidity out there, pull back and continue in the direction. That is a perfect way to enter the long trade in this case. Same thing if the liquidity run happens on a demand zone, seller's liquidity, then it's a short trade. Okay, so let's look at the second concept that you need to understand. Second one you need to understand is liquidity sweep. What is liquidity sweep? The price tend to move towards the liquidity zone, takes out all the liquidity, but when the market returns, it's not just a pullback. If the market completely reverses bars after bar, it's reversal completely. The reason is that once the price taken over the liquidity, sellers are re-establishing their strength. Most of the time, you will be able to see something like re-establishing those zones as well. So that's why they're re-establishing the control on the price level. That means once the price goes there, liquidity is swept, the price continue to push down, and then sellers are taking over. That is liquidity sweep. In this case, it's a short trade. Even though the price taken all the liquidity on the sell side, it's a short trade. Okay. One more in the similar variation is liquidity bounce. The price goes almost near to the liquidity zone, but as soon as the price reaches that liquidity zone, sellers jumping in and then start selling, pushing the price down. That's in this case the difference between sweep and bounce is that sweep, the buyers are able to take out the liquidity and then lost the control, but in this case the can't even take out the liquidity. The liquidity is so much stronger than the buyer's price action. As soon as the price reaches that liquidity zone, it bounces. Okay, so with these three concepts, let me try to explain what happened today in the market. I'm recording on July 15th 2024. Let's look at, I trade always NQ, but for me what I have, these two charts are ES, these are NQ. Even though I trade NQ, I always look at the ES. The reason is that you can see right now the contract sizes on ES is 400, 300, highest liquidity, compared to NQ is in 50s. You can see 50, 52. That took very thin volume on the NQ always compared to ES or even stocks. So that's why even though I trade NQ, I look at the liquidity zones on the ES. Okay, now let's look back in terms of what happened in the market with the same concept, right? So let's look at, while looking at this chart, the BSG liquidity zones, we have color coded the strongest supply in red, and then the weakest supply is in the purple. The strongest demand, strongest like a buyer's liquidity in green, and then weakest ones in blues. So I'm going to focus only on the reds and then the blues because those are strongest liquidity, right? So now let's walk through. We can see that when the market opened this morning on ES, the liquidity started building up here, strong liquidity. Look what happened. the price broken through all the liquidity up here and up here, completely taken out. After that, what happened? There was a little pullback and then continue. This is a excellent setup for a long trade, meaning buyers are so strong they're able to eat all the liquidity on the sell side, taking liquidity and then pushing the price up. To have a second confirmation, you can even see the green bar appearing right here. That means confirmation from here. Not only there, I want you to see same kind of setup happening again and again. Broken, pullback, continue. Next to sell side liquidity, broken, pullback. See this pullback and then continue. Maybe a little bit. Okay, pullback and continue. Again, broken, pullback, and then continue. It happened all morning until like almost like I'm in Central Time right here. Look at this. Now all these are the example of what I gave you about liquidity run, taking liquidity and running with the one direction, right? So but what happened finally there was a huge liquidity buildup at the 57.19. The price sudden dropped from there. This liquidity they are not able to take it out, right? So what happened? The price continued to slide down. At this point, the way I want you to look at who is getting killed, is it buyers liquidity or sellers liquidity? That's why you need to see. I don't want to see who is winning, I wanted to see who is losing ground. Okay, in this case all morning sellers liquidity is losing ground, getting killed. But now, okay, now after morning, now you can take a look at in terms of how buyers liquidity is getting killed. Now pull back, sellers are reestablishing from here, control here, but you can see now buyers are getting crushed. Now perfect way, a lot of sellers in terms of one more example, not just the liquidity run. Here's liquidity sweep example. There was liquidity build up here, price went up, taken the liquidity and then sudden rejection from the price. What happened? That liquidity is gone, but market continued to slide. That is why in terms of you need to watch out what happens to the price action right after the liquidity is gone. In this case we saw all three examples: liquidity run, liquidity bounce here, ignore the signal right here. So liquidity bounce here, liquidity sweep. Liquidity sweep is pure rejection of, they cannot take out the sellers are re-establishing, right? So again there is one more second sweep, taken liquidity, price rejection, taken liquidity, price rejection. Those are the clear indication of you can enter the short here, you can enter the short here, because as soon as liquidity was taken and then there's a clear rejection. One more right here, liquidity was taken and then price rejection completely, right? So continuously buyers are losing the ground, sellers are taking over the control step by step, right? So this is what I want you to find out exactly how you can trade the market. Even though ES is the best way to look at the overall market, the same rule applies for any stocks as well. In this case I'm looking at Tesla. Let's look at Tesla right now. Okay, this is from the morning. You can see as soon as the liquid taken out, there's a rejection. Do you see this one? Rejection on here, came down, and then there is a liquidity sweep right here. The green was taken out, and then what happened? The market pushed back up. Liquidity run, and then look at this, rejection once. We talked about liquidity bounce here, liquidity is not like, this is where you can see in terms of price pullback went up but clear rejection there. This is liquidity sweep. Know the difference between liquidity sweep and liquidity bounce. This is liquidity bounce right before the liquidity. This is taken liquidity, but after that they lost the ground, and then sellers are re-establishing. Remember we talked about the example in terms of after the liquidity sweep, the price went down, sellers taking over the control again, That is exactly what you're seeing right here. In terms of price, sellers liquidity taken out. When the price pushed down, sellers are re-establishing. What happened when sellers re-establishing? They continue to push the prices down. So prices again, sellers liquidity, price went up, taken the liquidity, but still the buyers can't control it. Sellers are pushing the prices down. You can see this example time and time again. Look at liquidity sweep right here, liquidity sweep right here, liquidity sweep right here. Sellers are taking over the control, and then you can see the sellers are losing. Buy side liquidity was running, completely destroyed again and again. Now let's look at NVIDIA. Okay, NVIDIA. Okay, so let's look at NVIDIA this morning. All right, so this is NVIDIA this morning. You can see market started here. When the market started, I want to see which one is getting broken. First one broken was the price at 129. The strongest supply bounced right here, but eventually it was broken, pulled back, continued further, and then eventually whatever the broken was re-established. Every time there's a re-establishment of sellers come in, look at the price action going down. You can, if you can trade just based on this concept, look at the sweep here. Pull, as soon as it taken liquidity, clear rejection candle right there. You can see that again and again. In terms of now, from this point the market went sideways. Even though it went sideways on both sides, I can see the clear rejection. In terms of it's forming a rectangle right here, even though it's forming a rectangle consolidation here, one thing I want you to take a look at, how every time it goes to the edge, taken liquidity, push it down, taken liquidity, push it up, taken liquidity, push it down, taken the liquidity, push it up. This is why it's very, very powerful to always have a level to information, how the market limit orders, level to information impacting the market. Okay, one more. Let's look at one more. Let's look at Apple. All right, so let's look at Apple in terms of same liquidity zones. When you guys buy the liquidity zones product from us, we'll send you settings for each instrument. Okay, let's look at from the morning. Okay, this is where morning starts from. Liquidity started here, sellers control here, and then sellers control here, sellers control here, and then this is where it get tricky, because this is not even there was a pullback. You might have entered long, you get killed. But you got to look at in terms of re-establishment or breaking out. One thing is always I look for, anytime the liquidity was taken out, do I see the opposite zone or same zone? In this case, look at this. Sell side liquidity was broken, re-established sell side. Sell side liquidity was broken, buy side came in back. That means same price, buyers are taking over. That kind of action you can see again and again. Liquidity sweep. You can see liquidity sweep again here. Liquidity sweep again here, push it down. It's further. This is the real time supply and demand is happening, as you can see based on the level to information. So again, remember the price action right after the liquidity was touched or taken out. That is where the real trading opportunity happens. I hope you are able to understand what I'm trying to convey. If you have any questions, that's something I can help, please send an email to info@buysideglobal.com. The product that I'm talking about here is BSG Liquidity Zones. If you want to use a product, you need to have level 2 subscription to your NinjaTrader. By default, you will not have level 1, just a historical pricing and current pricing. Level 2, you need to have the additional subscription to see the actual market. If you're able to open the DOM, you should be able to see all these orders pending in the market at different price levels. Our algorithm uses this information to find the strongest zones. Have a great day, guys.